Welcome to the Explainer. Today, we're going to pull back the curtain on the super fast-paced, jargon-filled world of day trading. We're going to step right inside a professional trader's mind as they break down the market and execute a very specific strategy, live, with real money on the line. So this is what we're starting with, the raw, unfiltered kickoff to a trading live stream. It's, a mix of Hindi, English, technical checks, just a lot of chatter. Our job is to cut through that chaos and pull out a clear, repeatable playbook from it all. Okay, so we're dropping you right onto the digital trading floor. And yeah, to an outsider, it probably looks like total chaos. But stick with us, because underneath all that noise, there's a clear logic that we can actually learn from. You see, before anyone even thinks about placing a trade, the day starts with a briefing. The host breaks down the key economic data that's basically going to be the fuel for the day's market moves. This isn't guesswork. It's about understanding the fundamental pressures right from the get-go. All right, let's get into it. To really get what this trader's doing, we gotta learn to speak the language. So we're going to translate the key terms they use to basically map out their entire trading day and spot any opportunities. Right away, the host flags this one key piece of data, PPI. Now, this isn't just some random acronym. This number is a huge deal. It sets the whole mood for the market and tells traders what kind of day they should be strapping in for. So PPI, that's the Producer Price Index, and it measures inflation for producers. But here's where it gets interesting. Look at these numbers. The market was forecasting, 0.2? But the actual number came in at 0.9. I mean, that is a massive surprise, and a gap that big screams one thing to traders: get ready for a volatile day. A pro trader doesn't just see a blank chart with squiggly lines. They see a map. And that map is defined by these levels. Think of resistance levels like R1 and R2 as price ceilings, and support levels like S1 and S2 as the floors. These pre-calculated zones and the computer's predicted range for the day are the landmarks that guide pretty much every move they make. And all of that brings us to the real heart of this explainer, a specific proprietary trading strategy. And this isn't something he just cooked up this morning. No, this is a method he's been rigorously testing day in and day out for 3 months straight, building confidence with data, not just feelings. Just listen to the confidence in his voice there. That doesn't come from ego, right? It comes from all that backtesting. He's essentially saying, look, I've run the numbers. I've seen this pattern play out over and over, and I know what it consistently does. That's what a professional system sounds like. So how does this thing actually work? Well, the logic is surprisingly simple, really. First, the trader spots a clear trend. That's your 3 candles in a row. Now, the market kind of expects a reversal, a black candle, to pull things back. The whole strategy, the magic of it, happens when that reversal just fails. It doesn't show up. And that's your cue to bet that the original momentum is just going to keep on going. Okay, this next part is absolutely crucial. It's how the trade is placed. See, the trader isn't using a buy limit order to try and catch a falling price. No, they're using a buy stop, an order placed above the current price. They aren't buying the dip, they're betting on the breakout and trying to ride that wave of momentum higher. Talk is cheap, right? And this host knows it. He doesn't just sit there and explain the theory. He puts his own money where his mouth is and shows us exactly how it works, live, in a real, unpredictable market that can do anything at any moment. And here we go, it plays out right in front of us. At 10 a.m., boom. The pattern forms 3 rising candles. That pullback everyone's expecting, the black candle, it's a no-show. The host places his buy-stop order, the price surges right through it, and just a minute later, the trade is closed. I mean, textbook execution of the plan. And the result of that? What? 2-minute trade? $187. Now, that's not a hypothetical gain. That's the tangible outcome of spotting the pattern, trusting the system, and executing with precision. It's proof that the strategy actually works. And when you hear the trader's confidence after that win, it just connects all the dots. That successful live trade wasn't a fluke. It was the real-time validation of those 3 months of testing.
It turned an abstract theory into a proven, profitable tool.
So let's step back for a second. What does this one trade, this one strategy really tell us about the broader mindset of a modern day trader? Because it's about way more than just clicking buy or sell.
So what's the formula here? Well, it's pretty clear it's not about having a crystal ball. It's this blend of disciplined pattern recognition with really sharp technical precision. It's about having the psychological control to trust your system, a system you've tested relentlessly, instead of just giving in to the impulse to guess.
So it makes you wonder, doesn't it? Maybe the real secret to navigating all this financial chaos isn't about trying to predict the future at all. Maybe it's about having a simple, well-defined, and battle-tested plan to react to what's happening right here,